Hello, welcome back. If you're new here, my name is Jessica Abella and I am a tax accountant in the greater Seattle area. And today we're going to talk about the tax provisions around a new home. So if you have purchased a new home, congratulations. Let's run through some things you might want to keep in mind. So first, there is a myth that buying a house will save you a bunch of money at tax time. And it just isn't true. Perhaps once upon a time when the standard deduction was lower and interest rates were high, that may have been more true. But as it is, your standard deduction is roughly $15,750 if you are single, $31,500 if you are married. You get that deduction whether you have the house or not. So that is the baseline that we're working with. Now that you have a house, the mortgage interest you're paying may help you take itemized deductions instead. And here are some of the things that are included in itemized deductions to keep track of. So medical expenses are the first one, anything that you pay out of pocket. The problem with that deduction is that it has to be more than 7.5% of your income. So that's a pretty huge percentage of your income. It usually only comes up if something catastrophic happened during the year. So that one's not likely to help. But the next one will. Taxes. The real estate taxes you pay on your home, the sales tax that you pay on major purchases. So if you purchase a vehicle, if you do a home renovation, the sales tax on those may be helpful. If you are not in Washington state and you're in a state with an income tax, the income tax to that state is deductible. Here in Washington, we get to deduct the sales tax, which you get a standard amount based on your income and the size of your household and the sales tax rate where you live. You can take that standard sales tax amount, or if you had a year that you purchased a great deal of stuff. So perhaps in this year that you purchased the house, you may have furnished the whole house and spent a lot more in sales tax than a normal year for you. It may be worth adding up that sales tax. In this same category is a portion of your vehicle licensing fee, the part of your tabs that is based on the value of the vehicle. So in this area, it's the RTA excise tax portion of your vehicle registration fee. So there is a limit on this tax section of this deduction. The limit has been $10,000 a year. Temporarily, it's going up to $40,000 as long as your income is under $500,000 a year. That can definitely help you get up over that standard deduction. So the mortgage interest, of course, that's the main reason we're talking about it today. That can be a pretty good chunk to help you get over that standard deduction as well. In that same section, margin interest. So if you have an investment account and you use the margin option to trade, interest on that is deductible in that section as well. Also gambling losses, but only up to the amount of winnings, and there's a new limitation that you can only deduct 90% of losses. So if you have winnings, you'll want to know about that loss deduction as well. Charitable donations also go in this section. The charitable donations do get reduced. They're not entirely deductible. You also get to deduct non-cash donations. So if you clean out your house and give stuff, certainly in the year of a move, that can happen. Make sure to keep track of what you donated, what the thrift shop value of those items was, what that was worth. Basically what they can resell it for. Take pictures, perhaps. We do have a video that goes more deeply into the rules around donating stuff, so I will link that down below. So all of these deductions we've been talking about, they get totaled up. And if those deductions are more than your standard deduction, so in this instance, let's just say that these deductions totaled up to $32,500 and you're married. And so with our hypothetical $31,500 standard deduction, it means you have an extra $1,000 in deductions that you didn't have before. That might reduce your tax bill $200 or so. So it's not a huge windfall, but it is helpful, and it does depend on your tax bracket. So, shifting gears a little bit, a couple other things to keep in mind as a homeowner. Keep track of any improvements or renovations you do to the house that may be important when you go to sell the house. There isn't a tax deduction for your regular repairs or maintenance, but the renovations and improvements do add to your cost in the home. And then we talked about the sales tax already on that. So keep a folder, preferably a digital folder at this point, that backs up somewhere to store those receipts so that you can access them later. While we're on the topic of selling the house, let's talk about the provisions around selling a house, because there's some myths out there on this too. First, the IRS doesn't care about the loan balance on the house. So when you go to sell for profit purposes for the IRS, all that we need to, in a most simple form, consider is what was your purchase price and what is your sales price. We also get to adjust for things like the major closing costs, again, improvements. It's a bit more complicated than this, but in its most simple form, that's how we're determining profit. With that profit, do you have to pay tax on it is a whole nother question, and it depends. If you owned and lived in the home at least 2 full years and then sell it, you don't have to pay tax on $250,000 worth of profit, $500,000 if you're married. If this property has also been a rental at some point, it gets more complicated. If you move out and turn it into a rental, know that the rule is that you have to have owned and lived in the house 2 full years of the 5 preceding sales. So when you move out, you have 3 years to the day to close on a sale and still take that $250,000 exclusion. So don't cut it close. Make sure that it's going to close in time if you're planning to take advantage of that exclusion. So hopefully this has been helpful. I know I threw a lot of information at you. If there are follow-up questions or questions on any other tax or business topic, feel free to drop that in the comment section and I will do my best to get those answered. And subscribe if you'd like to be notified of the next video. Thanks again for being here and have a fantastic rest of your day.